Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's September 26th. This will be our chart lesson for the day, and this is going to wrap up our week. No chart lessons on Fridays. Um, we had a few trades early in the morning, and then it was pretty sparse this afternoon. We did have a reversal, but you just didn't get a lot of really good opportunities. That's one thing lately. These reversals have been taking off pretty quickly, and you're not getting a lot of opportunity to enter them because prices just rocket off. And that's what happens in big sell-off days. You know, finally the market will get spooked and it looks like it's reversing, and all of a sudden the buyers come rushing in. Everybody, all the sellers exit out, and you get these big moves up. So, um, it is what it is. You could probably argue for a few entries in there, but personally, if you follow the rules, you're going to be better off. You're always better off. No trade is always better than a losing trade. And sometimes you have to sit for long periods of time and not take a trade. We had to early this morning. You had your first trade right at 7, and then it was after 8:30 before you had another trade. But then look what comes along. You get multiple opportunities in here. And then suddenly around 11 o'clock, you get a couple of trades between 11 and noon, and then I don't really see anything else I like the rest of the day. There's some chances that you could short this up here, but if you follow the rules, there's no really good short setup. You might have considered this short right here. I didn't mark it. I'll go ahead and mark it green just so I don't forget to talk about it. But I didn't mark it. But let's at least mark it green here, just so I don't forget to talk about it. And you could argue for it to be green for that matter. So, but I'll explain to you why I don't like it when we get to it, and we can go from there. So, anyway, let me back out a little more, and we'll talk about the trades. And what I would have done is I would have measured this. This is really where the downtrend started. I'd measure it both ways, but I'd measure it here too. And then we started back down right here, so I'd look for a measured move, and you can see we got real close to that. We still didn't quite get it, and if you measured it from the very high, we didn't get it either. So, but there's a two-legged correction, right? That's generally the middle of the pattern, right off the key entry point, and you can see how close we got to a measured move right there. And so that could have kept you possibly trying to stay in the shorts until you got within a point or so of that measured move. But anyway, let's back out a little more, talk about the trades, and we'll wrap our week up. I mean, if you catch this first trade right out of the gate here, that's probably the only trade you need all day, because you can ride this all the way down. If you catch one, even if you just have one runner, you're basically dropping from 29.92 area all the way down to, let's just say you exited when you broke the trend line, 29.79. So that's what, 13, 14 points there. Real easy trade. So that's all you need. You don't have to have a bunch of trades every day. So if you can find a day where you got eight, even 5 to 7 trades. I don't know how many there were here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, there's 9 trades just counting the blue and red ones. It's not counting the green ones. And for those of you that never seem to read the disclaimer at the beginning, the idea behind the green ones is they're aggressive trades. They're not trades you necessarily want to take, but they do fit our rules to some degree, and sometimes being a little bit aggressive, they happen at certain areas where you have a great opportunity. So, but generally the red shorts are the good shorts that we like. The blue arrows are the good longs that we like, and the green ones, either direction, are trades that are very aggressive, but there's reasons to like them based on what we do, and sometimes they become great reversal type areas, and things like that are continuation areas. And so just make sure you understand the difference, because a lot of times people will ask me about a green one, and I'll say, well, you do realize that means trade's not necessarily one you want to take, and they'll, no, I didn't know that. So make sure you understand that. But anyway, let's talk about the trades. Let me back this out a little more, make it nice and big where everybody can see it. 7 o'clock came right in this little uptrend, and notice you're working down first entry, and then you're coming back. There's a second entry long when it broke higher right there, And when it broke lower right here, that was a failure. You might could argue for that one. That's one you could mark green. Technically, it's not a failure, but that's not the issue. Technically, what we consider a true failure is if it turns down, if the second entry with the trend turns down, or counter trend either way. It's just a second entry that doesn't that reverses before it reaches a scalper's profit. That's a failure. And sometimes it may go a few ticks more, and we still consider it a failure. Just because of where it sets up and the fact that we would expect prices to go further or that kind of thing. So there's different ways to look at that. But technically, by the book, if it goes more than a scalper, if it goes 5 ticks or more where you would have been able to scalp out in full, it's not considered a failure by the rules. But I've explained that a bunch of times that I still like a lot of these trades regardless. So you might look at that as a failure and go short. We're a little ways away from the EMA, have been since almost 2 o'clock in the morning. So it's time to come back to the EMA and maybe even push through it a little bit. So you may take that trade. But if you waited, the better trade was here. We came back again, confirmed that trend line. It did not break higher, but it made a double top. And when you make this little 2-bar matching low, even though it didn't break higher or break below there, it's still considered a second entry because that's still considered a high or low. Now, if this made a one tick lower, it would not be a second entry. Just the fact that there's a 2-bar matching low, you can treat that like a second entry because that's like a new low. So you may not could have got in that trade, but that was a nice move down. I would at least drop a lemon order in there and try. You wouldn't have been able to get a buy stop in there in time because it just closed on its low and opened right on its high and started moving. But it did gyrate a little bit, so maybe you get filled, maybe you don't. Then we correct right here. Now you got 2 legs down, so you could consider this a failed second entry on a bigger picture. I wouldn't trade it that way. But you can see there is 1 leg down there, a correction, and a measured leg down. And we tried to go higher, and it fails. So you might take that trade if you had a good signal bar. There is a hidden second entry here too. Notice you go up, first entry, you go up, second entry. There's some reasons to consider that trade. It didn't quite get back to the trend line, so I'm not crazy about it. But it's another one. You might say, okay, we'll treat that like a failed second entry long on the bigger picture. And I think somebody else sent me their chart here, and they actually had a true break higher and a lower high here, so it was a true second entry for them. So on my chart, it's not. So you may take that one. And there is a new swing high right here as well, so you could look at that as a failed second entry long as well on my chart anyway, but it's right into what looks like at that point the low side of the channel, so I'm not crazy about entering there. Turns out that's just a midline, but you don't know that at the time. And I just don't see any entries in here that I like. But notice finally you make a low, it's an equal distance low, and you first entry, and you come back and you get a second entry short with a big bearish bar. Just make sure you got room to get out there. There's just enough room on my chart. That's so bearish. And that's the first break of that big long trend line right there. So we're probably going to push down and make a new low, which it does. And notice you make a new low, then first entry, and you come back to the midline, and you get that big bearish bar on a second entry. I like going short there again. You may let this one back up because there's not much room there. You need enough room to get out, so that would kind of dictate that one maybe. But there's also, notice you made that high, you test it once, you test it twice. It's right at the EMA, it's right at the midline. It is a second entry short. It's a hugely bearish bar. It does gap over, so you may not could have got in it. You could have used a limit order if you wanted. But there's a lower high here, but you don't have room. And then it comes back and makes that failed second entry long. Notice that high, first entry, second entry. And it gives you a big bearish bar again right there at the key entry point. I like going short there again. And off it goes again. Normally, if you hadn't have had this big downtrend, I'd probably say if this was just kind of a range type day, you'd probably skip all of those because there's not much room there. But the fact that we're pushing down, we're probably going to make a new low here, and you can see we did, and then you had your correction. You're always better off to wait for it to come back, either to give you a little bar up here near the resistance, or to come back to the key entry point up here. And when it gives you a technically this is not a second entry on my chart. Let me show you why. Your trend line's coming up and you get a first entry right there, and so your second entry is technically here, but this is still all really one leg up, and then first entry, and then another leg up and second entry. That's really all one move, and you don't want to be entering a second entry here in the middle of nowhere. You might say, okay, there's some resistance right there, but we're back above the EMA. We're probably headed back up here because we just came off the low. So I'm not going to, I wouldn't want to take that trade. But notice too, you get a close outside that trend line now, and then a new high, and then you could treat that as a bigger second entry, which it really is. And you got a real small, easy to enter bar right there, at least on my chart. That's a great entry, and off it goes again. There is a lower high here, and it's a breakout pullback on this, but we're right into the midline, and we've been going sideways a good bit. So there's no, there's no guarantee we're going to push through that midline and drop on down again. So item's a little risky. It is right onto that short-term key entry point, but that's the low of the day at this point. You're going short right into it. It would have worked, but I think it's too risky. And of course, we just kind of chop sideways. We do make a higher low here, but it's right into the EMA. It's made a double top. Wait on your failure, which is right here, and that doesn't look like anything that's going anywhere. It does end up going higher, but there's no real setup there that you want to risk or anything. When it came back again here, you might say, hey, I might enter here. But again, I don't think it's worth it because that's the first break. This has been a pretty strong downtrend, and that's the first break of that trend line. So we're probably going to turn down shortly and go try to make a new low. So just kind of sit and see what happens. Let this play out a little more, and then finally you make this new high, and then your lower high is right here, and it comes back, tests the EMA after it pushes through, gives you a big bearish bar. That's the better place to go short. It actually comes back again, and you could again look at this as a failed second entry long. It's really not because we ticked higher here, but that's really still all one move. But this is still part of that same move too. So I don't think that's worth risking right there. It does turn out to be a nice move down, but I don't see any entry I like. Just be patient, and by doing so, next thing you know, you get a nice second entry right here. And notice it comes up, you get a break, new high, and it's a lower high double top, bearish bar. It's a second entry short, new low, first entry, second entry. That's a better place, and look at it go again. And then we bounce down here again. Again, you got a second entry short. I didn't mark this one because it's an inside bar, but you're still a little ways from the EMA. It is a second entry short. Notice that new low, first entry, second entry. The only problem is we've already had a break of the main trend line and a couple of legs down. We've almost had a measured move. And if this was not an inside bar, I'd probably mark this. You still could argue for it to be green. It's one of those, like I talked about at the very beginning of the video. There's some reasons to like that trade, but if you're looking at the big picture and the context, then it's probably a little late to be trying to get short. But if you're going to get short, this is where you do it on a second entry, way away from the EMA, where you've got that on your side too, where it probably would at least come back and test the EMA before it goes higher. So then you make a higher low here. It's lower than this one, but it's still way higher than this one. And if you get another higher low, like right here, and that's a second entry long too. Look at that new high, pull back, first entry, then you pull back again and make a higher low, and that's a nice reversal type bar because it was trading way down here and it ended up closing way up here. If it breaks higher, we're probably going to at least make another leg up, like this one right here at a very minimum. And so that gives you a big target of way up here, and that gives you plenty of room to get out before this high, and that turns out to be a nice trade. There is a failed second entry short right here. I'm not crazy about it. you might take it because it does come back to the key entry point basically right there. You can kind of see that. But I don't think I'd probably take that trade. I made it green anyway because it is a failed second entry short. But generally your best ones will come back to the EMA. But the other thing going for you is we didn't quite have a measured move. And that's the other thing too that I don't like about that one, because there's not much room between there and reaching that measured move. It would have got you a scalp because it kept going higher. And there's just nothing else up here that I like. We finally get a close outside a new high. And this is a good example of why you like to generally wait, especially when you're trending higher. You want to wait on a lower high because this looks like a really good trade. Look how long we've been away from the EMA. You do have a close outside and a new high here, but it's a very good chance that you may have tried to scalp out here and had a failure and got stopped out, only to watch it go exactly where it looked like it was going to go. So then of course you're moving down, pull back, you get a first entry short, and it fails, or it doesn't fail. I mean, it fails to go higher and it turns back down. But it's right into the EMA, right into the midline. We are kind of trending upwards. I don't think you want to go short right there. You're better off to wait and look and see if we get a long down here, if there's some kind of trend line down here. And we do bounce there. We make a higher low, and you've got two legs down, and you make that higher low, and that's a big bullish bar. I like going long right there. And if you catch that one, you get a nice run up. It does come back here again, and this is actually a lower high. It actually comes back and gives you a failure right here. I'm not as crazy about that one, but still it's a failed second entry short. If it breaks higher, there's a chance you go higher. It actually comes back again even here, but when we didn't go anywhere this time, I definitely wouldn't take this one because you could easily find this midline by this point, and you don't want to be going long right into that midline. You see how it caught right there. It ends up pushing through, but a lot of times it won't. It turns back down. So you want to see it get above that and test it from the other side before you try to go long. And this thing just moves on up, and then we just kind of going sideways into 2 o'clock. Again, this one is tempting, but we're in an uptrend, so you better wait on a lower high, which comes right here. And by that time, you're going sideways. You do make another failed second entry long and a lower high here with a big bearish bar, so you might go short right there. Again, it's late in the day, so it's getting a little risky going into 2 o'clock, taking a trade like that. So I marked it green, but it's a possibility. But generally, when you break out of these, you fail real quickly, which you still did, but it was enough to get a scalp. And you see we failed out the low side. And generally, if you trade up into this, if it's going to continue on successfully, it's probably going to go out the other side. That's not 100%, but more times than not, that's what happens. And you can see we moved on up before we sold back off late into the afternoon. So that's what I saw today. Again, most of your trades were early on. Got a little thin here in the afternoon, and that's when it's hard to sit tight and just be patient. And generally, you're going to have more of your better trades, and it just, the price action seems to be more stable and easier to read in the morning hours to me. That's just my opinion. You may think differently, but that's just my opinion. So, but anyway, not a bad trading day. Not the best trading day, but certainly not the worst, especially early on with this strong downtrend. You got to take advantage of that. But anyway, I'm going to wrap it up. We're going to be done for the week. I'll be back again Monday. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.